Dow jumping 200 points at the open this morning.
Just a good place to put your savings.
You suddenly put them together and you say, damn it, that's what's happening.
Beat inflation, make money while sleep, get rich quick, capital appreciation, 10x return, power of compounding. Everything is possible by investing in the stock market. At least this is what we heard. And for more boost, Warren Buffett become billionaire by investing in stock market. James Simmons earned billions by investing in stock market. Rakesh Jhunjhunwala, billionaire by investing in stock market, and list goes on and on. Sounds exciting, right? So we think this is it. This is the way to get rich quick. And we also want to make big money by investing in the stock market. So we do all the research and analysis. Now we think we know everything about the market. So we start investing in the stock market. Time passes. After many ups and downs, we end up losing money instead of making money. Then our mind starts finding reasons what went wrong. We start blaming our research and analysis, the economic conditions, regulators, operators, and the list goes on and on. The reason is, after some research and trades, most of us like to think that we know stock market, but in the reality we don't. Market is not what we study in the books or what most of market gurus tells us. It has many dark pools which is not known to us. Neither it is included in any stock market books. To understand a stock market, first we need to understand about their players or parties or stakeholders. First is the company and their owners or shareholders like promoters, key managerial personnel, their big stakeholders and other shareholders. Second is stock exchange, the platform where we buy and sell shares. Third is market regulator like SEC in USA, SEBI in India and SEBON in Nepal. Fourth is stockbroker, the middleman between stock exchange and clients. Fifth is settlement company or payment for order flow companies who manage payment flows. Sixth is depository, an organization where share certificate stores and transfer of share take place. Seventh is institutional investor like investment bankings, mutual fund companies and other investment companies. Eighth is big individual investor, the individual who enter in the market with big amounts of money. And ninth is us, small investors. Now we must pay very close attention on three things. First, if we study shareholder pattern of stock exchange, settlement company, institutional investor, broker or big investors, normally we can find that same shareholders are everywhere, or at least we can find some link between them. Second, top 10% of people owns more than 70% of the stock market, and it is in increasing trend.
New investors opened trading accounts during the pandemic. Robinhood alone added over 10 million accounts, now at over 22 million. But stock market wealth has not become more democratized. In fact, it's become more concentrated. According to the latest Fed data, the top 1% now owns 54% of all stocks. The top 10% owns 90%. Both are at all-time records.
Third, the regulatory bodies act only after any suspicion or wrongdoing gets known to them. But by the time regulators discover any fraud or a scam, it's already too late for a small investor to act upon. So you can just imagine how much power and influence those big investors have in the market. Because their organizations or their chain of organizations owns big stake in the company, stock exchange, broking firm and settlement companies. We do our fundamental analysis by using publicly available financial data, which company provides us. But those financial informations are nothing but the information company wants us to know and believe. But in the most case, actual informations are different than shown in the financials. Only promoters, key managerial personnel, and big stakeholders normally have access of actual inside information. Because in the reality, management and board of directors decide what to show in their financials. And big investors are among the board members, or if not, then at least they are very close to the management or the board. Now you must be wondering that what about audits? How come auditors are not able to find actual figures? The reason is audit has its own limitations, and due to sample based checking there are many loopholes where management can hide and manipulate facts if they want. And there are also numerous cases where we can find auditors' involvement in the fraud. Technical analysis is a study of charts which shows price and volume movements of the stock to predict the movement in the future. But big investors know very well that we use well-known techniques for our analysis, so they can easily play with our analysis by using huge funds to move that stock in reverse directions than what our analysis shows. But some of us think that short-term movements of the stock will not affect long-term investors. But the truth is, every small and retail investors are long-term investors before the fall. In my opinion, we can only understand up to 40 to 50% of the stock with the help of our research and analysis, and rest depends upon the above things. Now the question is, how big investors like investment bankers, promoters, mutual funds and other big investors are making tons of money in the market? The answer is very simple, because they are in the position to get their hands on actual information of the company. They can move that stock, and they are the first to know if something goes wrong or right in that company. They know the promoters, board members, key managerial personnel, their strength, weakness, their next moves. In many cases, they are in the board. Due to their large stake, they are the part of their decision makings, and that is why they are the first to know what is wrong or right going on in that company. So they get the opportunity to act first in the market. And please don't get confused this with insider trading, because insider trading is contradictory thing with many loopholes. And another thing is, even those who are not part of all this but have big amount of money to invest in a stock market can easily move some small stock and can trap retail investors. And these are the reasons why promoters, board of directors, key managerial personnel and big investors are always the winners even at the time of insolvency, because facts gets known to them first, so they can manage to get themselves out before others. And the losers are always the small stakeholders, because by the time they know the fact, it's already too late. So that's it. There is no scope to make money for a small investor in the stock market. Well, it depends. If you truly believe a company and its financial information are true and fair, you know the promoters, you know their strength, weakness, their next moves, you also know their big investors, then you can invest in that company. But for a small investor, it is quite impossible to know all these things. So the best way to invest in a stock market for a small investor is just buy an index fund once available at fair price. The benefit of investing in index fund is, index funds are normally created with top performing companies in the market or the industry, and bad performer used to get replaced by good performing companies. And thank you so much for watching to the end. If you like my work, hit like. If you don't like, hit dislike twice just to make sure, and let me know the reason in the comment. And yeah, thanks again. Have a great time. See you in the next.